happens when you buy a disability insurance policy through your employer and your employer then changes disability insurance carriers? Do you still have disability insurance coverage? And if so, with what carrier? And the answer to this question is going to be found in the continuity of coverage provision in your disability insurance policy or plan. This continuity of coverage policy provision will hopefully address this situation. And I know that it isn't uncommon for employees to get lost in the shuffle and lose their coverage through no fault of their own, despite paying premiums for years. And I want to give you an example of this insurance coverage shuffle. Mr. Miller was a ship pilot and he had multiple medical problems. He went out on disability in 2015. And his employer changed disability carriers from Prudential to Reliance. He went back to work in July of 2016. And then he injured himself at work on a ladder in 2016. He applied for disability benefits through Reliance. And Reliance said, oh no, you weren't insured on our plan until August 1st, 2016, which was the first day of the month involving his return to active work. The Reliance policy had a pre-existing condition clause that barred coverage if the plan beneficiary had undergone treatment within 3 months prior to the date of the same medical condition that was the basis of the concurrent claim. So, of course, in this case, Miller had treatment for the same medical problem during the 3-month period. And Reliance said, oh no, we're going to deny this claim on the basis that this is covered under the pre-existing condition clause. So Miller appealed the denial, and he argued that his coverage started well before August 1st, 2016, and that Reliance had to credit his prior coverage with Prudential, and that there was what's called this continuity of coverage that prevented Reliance from raising this pre-existing condition clause in denying his claim. Well, you can imagine Reliance didn't change their position. And this case ended up in the Fifth Circuit in a case called Miller versus Reliance Standard Life. The court had to construe the policy language that if the continuity of coverage existed where an employee was covered under the prior group long-term insurance plan maintained prior to the policy's effective date, but wasn't actively at work due to injury or sickness as of the effective date of the policy. Now, that's obviously very convoluted policy language, and we have to work through the facts of each case. Miller was clearly previously covered under a disability insurance policy, and he wasn't actively at work when the policy changed to Reliance. And he wasn't actively at work because he had a workers' compensation claim. To be entitled to coverage, Miller had to establish that he was otherwise an eligible person and that he was still an active employee in any other respect other than performing his duties as of the policy's effective date. So, of course, in the facts of this case, Miller met that requirement. The Fifth Circuit found that he was covered because Reliance's definition of eligible person was ambiguous. The court found that the term included those who, on the relevant date, were current employees, even if they weren't actually working. So you can see that how the policy is written is really crucial as to whether or not there's continuity of coverage when there's a change in carriers. And of course, the facts matter. Why was he out? How long was he out? Was he still actively at work? These cases are very fact intensive. And if you're in a situation where the disability carrier is denying your claim because there's allegedly a lack of coverage or there's an argument that there's a pre-existing condition clause that's applicable, you owe it to yourself to consult with an experienced ERISA disability attorney who will help weed through the policy language and develop the necessary facts. Obviously, it's a complex issue. But Miller was lucky. Next time, a policyholder may not be so lucky.